Hello, everyone. Welcome back to the How to Trade Switch Markets community. I'm Shane Vernier. Today, we're going to talk about trading the PPI fallout. Absolutely a huge PPI report earlier today. We saw inflation come in extremely hot, and it really cast doubt on those rate cuts for later September, but did it? The odds of interest rate cuts did not really move very much, and I'm watching eagerly, waiting for the markets to do really some sort of reaction to what I would call is probably the first shred of evidence that you're seeing tariffs potentially drive prices a little bit higher. A lot of folks have been arguing with me over the past few days about, Shane, you don't know what you're talking about, tariffs. And I go, listen, tariffs in the CPI, not necessarily. Tariffs in the PPI, that definitely, we saw some evidence today that producer prices are on the way up, and that's not a good sign, especially if you're watching inflation and potentially bracing for those interest rate cuts in September. It looks like we're still going to get them, but we're going to talk about that a little bit later on. So it's good to see everybody back. I think that this is really a fantastic trading day. A lot of volatility, a lot of news getting ready to break. I believe Trump's talking right now. God only knows what he's saying. So if you are in the market, be ready for anything because the big announcements typically come and we're not expecting them from the Trump administration. And so we really have to be diligent and careful about what we're doing with our risk exposure while the President of the United States is speaking. We didn't have to worry about that over the last 4 years with Biden. He didn't say anything. He typically gave very, very few press engagements. And when he did speak, it was off a prompter. Trump goes off the cuff, and he talks a lot. So we got to be ready for anything. Be ready for the volatility. Going into tomorrow's Russia meeting, the Russia-U.S. summit in Alaska, that's a huge market driver. I'm going to go over those headlines as well. We're going to cover the key markets and get you up and ready to go. Team Marina, good to see you. Happy Thursday. Ralph H., good to see you. Ralph H. Tuku, good to see you. Tuku, welcome. Bobby Bob, always a pleasure. Let's see, Bobby Bob, Shane, U.S. President Trump speaks at the same time you're live. We got to look at WTI. Yeah, we had a trade idea out on U.S. oil. Pretty good one. It was a pretty good one. But right now, U.S. oil is pushing higher, so we're definitely going to have to look at that and see exactly what's cooking in those commodity markets. All right, guys, let's get right out to price action. I want to start off with MT5 here, our MT5 platform, our Switch Markets Live. What we're looking at here is the Australian dollar, U.S. dollar. Now, it's been a big week for the Aussie. You had the RBA get involved with an interest rate cut. And now we've got PPI, CPI. We've got the big summit there with Trump and Putin in Alaska tomorrow. So there's a lot facing. This is an absolute one of the big movers and shakers right now. There's a lot of opinions out there for the Australian dollar, and rightfully so. This has been really a marquee instrument probably over the last 24 hours. So if you're trading the Aussie, you're not alone. I'm going to go ahead and throw some Fibonacci's up here and show you what I think of this market. Anytime I see a bunch of big market drivers facing a specific market or an asset, the number one thing I like to do is step back. Let's step back to 10,000 feet. Let's take a look at what's been happening over the past several months. Now, does that help us on an intraday basis? It certainly can. It certainly can, but we got to be aware of where our macro levels are and what exactly we need to be thinking about with regards to a broader market state and potentially where we need to take a position. Now, does that impact you if you're trading EAs? Maybe not so much. Maybe if you're trading an EA based on 1 or 2 or 3 or 5 minute charts, you're probably not going to necessarily need to look at your monthly. But if you're a discretionary trader who's maybe trading a 4-hour chart or a 30-minute chart, all these levels, they all help. They all help because our macro levels tell us where the participation is going to come in the market. That's where the buyers and the sellers are going to duke it out, and we're going to be able maybe to capitalize on the action if, in fact, we get a little bit of participation at a given level. So good to see everybody. Let's see. Late arriving crowd today. That's okay. Maybe I went a little early. Tina, good to see you. Tina, welcome. Jonathan Ross, hello there. Bitcoin is hot. Yeah, Bitcoin is hot. So is PPI. PPI is hot too. Let me see. Tina, I have a long on oil and a short on the Euro USD. I'm going to cover both of those in just a second. Alan, good to see Alan. All right, guys. Australian dollar, US dollar. I want to focus on this one just for a second to throw out some key levels. My Fibonacci retracement tool here on your MT5 platform. And you've got something like this. Interesting right there. You've got a big time zone. We're above that zone, so we're still sort of this macro bullish trend, I would say, over the last, maybe 100 days. Still in effect. Nice big sell-off last month, a correction. Really nothing to worry about unless you got caught up in that mess. If you did, you're sort of back on the bull now. But the question is what's going to happen in the ultra short term. Let's go right there. I wanted to see exactly where that 38% level was because it could have been an area where we could have planned to bid. Let's go right here to a 4-hour chart, and here you go. 4-hour chart, Australian dollars falling out of bed, and what we have to look at potentially is following the short-term price action. So you say, Shane, how would you trade this right now today? Something like that. Absolutely something like that. And the reason why is you've got really a stiff downtrend over what the past, 12 hours or so. I wouldn't really call that the beginning of the downtrend, but that is sort of that inverted hammer, that formation I talk a lot about. That right there, very, very interesting, sort of a reversal type of an indicator. And then the big sellers have come right into the action. And then right there, that's going to be your 38% sell right up around 65.15, so maybe 65.09s, somewhere right in there. Could be pretty good. I would probably wait till 65.12-ish at least. But if you do get that pullback, and we're starting to get it right now, opportunity maybe knocking, maybe looking to grab maybe a 10, 15, 20 point or 20 tick scalp on that. Right now, looking at our spreads up here in our one-click trading, very, very tight spreads here in this Australian dollar over at Switch. So I think that this is an interesting pair to be trading. I would be selling pullbacks here as long as we get a little bottom to set up, a intercession bottom there. I would look for a pullback right up above that 65 level, 65.13-ish, somewhere in there, and then that could potentially be your sell. Now, I got asked a couple of great questions, functional questions that I'm going to answer during the stream. I'm going to talk about how you can adjust your trades here on MT5, adjust your profit target and your stop loss. Then I'm also going to show you how to add the volume indicators on your charts. A lot of people have really been asking me about volume lately, so I'm going to talk a little bit about volume too. Hamu, good to see you. Hamu, let's see. Great Britain pounds, Japanese yen. Please review. Is that a fake rally? Yeah, we'll take a look at the guppy too. We definitely have to. Andrea Garwell, good to see you. Andrea, welcome. Hi, Shane. The U.S. dollar, Japanese yen is getting close to the 62% on the 4-hour chart. Maybe a late day retracement. All right, let's go ahead and take a look at that. We'll go ahead and cover these two real quick, and then we'll get on with the show. I definitely want to encourage any and all questions. That's definitely sort of the idea with these live streams. Okay, so what do you have here? Let's go down to the 4-hour chart. Let's see, getting close to the 62% on the 4-hour. So something like this probably would be your 4-hour type of a retracement zone here. I would love to see really a nice pullback in this area here for this dollar yen. Pull back right in this zone. Love to see it pull back and then maybe get in with this 12-hour trend, something like that. As far as, what could we be looking at for maybe potentially a resistance level? I could see where you were building your Fibonacci's from, maybe right up here. Let me back off to a daily and see what this looks like. Yeah, this is interesting stuff right here on the daily. You could definitely just go right here with your Fibby tool and see exactly where the game stands. Something like this. 62%. We're just above that on the daily. 78. That would be probably the next level I'm looking at. What do we got? About 148. 148 even up there. I think you're probably in that neighborhood there for a potential sell, maybe some short-term resistance. Let's back off to that 4-hour chart. Interesting because we sort of have a spike high here. We took that spike high out. So potentially we could run sort of, I wouldn't call this an experimental Fibonacci sequence, but I would call it definitely a secondary Fibonacci sequence, something like this. And this MT5 is sort of clunky, but we're above 78% there. I would be looking right around that 148, maybe 05-ish, somewhere in there, maybe 148 even. This area right up in here could be a fantastic zone, potentially to scalp to the short with this U.S. dollar, Japanese yen. All right, let's take a look at one more. The Great Britain pound, Japanese yen. While we're talking yen, clearly the yen's on the move. It's one of our favorite, really one of our favorite currencies to trade. In my book, it is. And remember, if you're over here on your Switch Markets platform, you go right to your Market Watch. It's behind my picture, but you click that plus sign, and you go ahead and pull up the market that you'd like, and then you just hit plus, hit enter. Add it to your chart, and right there it shows up in your Market Watch. Thousands of instruments. Definitely focus your efforts. Do we think that there's going to be a failed auction here in the Great Britain, the Great Britain pound, Japanese yen? I don't particularly see it. I mean, right there, that dip was really indicative of what we would like to do with Fibonacci trading. I mean, you definitely want to be long from there. The trend is definitely up. The real question is how do we trade it right now? This would be a real tough one, Hamu. A fake rally, I don't know. I mean, this right here suggests that this bullish trend, this daily bullish trend, is still very much a valid trend. And then right now we're sort of getting compression right around what, 200? Guys, it's all about key levels. Be very careful right there at 200 if you are in fact trading the yen. Yeah, I do believe that's right at 200, so you want to be careful there. You don't want to get caught up in the mess that could definitely be chop. What happened? Big sell-off beneath 200. We thought we were going to get a run down here, maybe to 198.50-ish, something like that. Big bounce right back up to 200. This could be really tricky trading, Hamu. I would be careful. I think that if I was trading this right now, I would want to pull back into that 12-hour range, maybe something like this. something like that. Maybe a bid from right down there, right around 195.50, something like that, 195.55, or excuse me, 199.55, something like that. You're going to want to definitely be ready for anything here. Anything can happen. Japanese yen on fire right now, and that's definitely a big key to what we like to do. All right, one last thing before we move on from MT5. I'm going to show you a couple of different things. These questions were elementary. They're not elementary. They're important, but you've got to really know how to use these tools before you just jump in and try to start using them. Lewis 79, good to see you. Welcome. Let me see. Alan, Shane, what's your entry criteria on the Fibonacci retracements? At what point do you pull the trigger? Yeah, so to answer your question, my entry criteria, once I've got my Fibonacci retracement sequence drawn, you can see right here, this is a fully formed spike to the bottom. So that means that this second candle is lower than the first. It's also lower than the third. But you'll notice that I drew the Fibonacci's right to this top. As of right now, this does count as a spike just because it's the upper extreme. You've got the next bar that started. However, as soon as this bar trades up, then we have to reset our Fibonacci retracement sequence. Now, my entry criteria, I love trading 38%, I love trading 62%, and love 78%. Now, 38%, 62% is probably my favorite level. I don't trade 50% unless I've got convergence with a moving average, and then I'll do it. But as far as when I'm looking to trade 38, 62, 78. Now, the real question is how do we nail these entries? And guys, this is when trading is hard. Now, remember, when we talk about trading, no matter what your strategy is, when you trade, you give away something to get back something in return. And it's very, very important that we understand you're always going to have sort of a weak spot in your strategy. You're always going to have something that you have to sacrifice to try to get that profitability. For me, trading horizontal support and resistance zones, you have to be aware that you're not going to catch every little trade. Now, you have two decisions to make, really. You're either going to want to go in ahead of your levels on say, this buy. You're going to put your entry point right above these levels, or you're going to wait for an exact hit of these levels. I have gotten away from waiting. I like to be aggressive. I like to shade my entry. In a trade like this, I probably would be looking for a key number. So if our Fibonacci is right around, say, 199.53, something like that, I'd probably be looking at like 57s, maybe a little bit bigger. If the time frame was bigger, say a weekly time frame, I might shade that as much as 10 pips, maybe. But I'm always looking for key numbers to sort of put my entry right above on a buy or right below on a sell. So when those key numbers line up with the Fibonacci's, I've got an entry point that's fairly intuitive and obvious. Now, what isn't obvious is when there's no key numbers around and you're saying, Shane, are you going to wait exactly for price to hit that 38%? And the answer is no, I'm not. And the reason why is a lot of times when these levels come into play, the bidders exhaust themselves before the level itself. I want everybody to understand that. There's nothing magic and inherently magic about these levels. They're not magic. It's not, believe me, this is not witchcraft. What we're trying to do here is figure out market structure, which we've done really easily right here. We are in a 12-hour uptrend, I would say. We've moved a significant amount. Now we're waiting for a pullback to capitalize on the bidding that drove that initial move. Now, where this strategy struggles is it doesn't always get you elected. Price could easily fizzle out up here before we ever get our bid and keep going higher. That's sort of what we give away. We're waiting for a nice retracement, a measured retracement down to our levels, and then we're looking to go long. So those would be my entry criteria. I'm looking to shade a little bit above the 38, the 62, and the 78 on a buy, and then I'm looking to shade a little bit beneath on a 38, a 62, or a 78 on a sell. I don't trade. I don't even look at the 20-something percents, not even on my chart. I don't even bother with it. I saw somebody lose a lot of money using 20-something percent Fibonacci. I don't even consider it. And then the 50% level, I'll take those trades, but they have to be with supporting evidence. And I'm sort of coming around to maybe just trading 50% on the Euro USD. That's a big time level for that currency pair. So let me see. Happy Thursday. All right, guys. So that's a sort of answer to the question there. A couple of functional things that I want to go over here relatively quickly. Let's just throw US Tech up here. 4-hour chart for US Tech. I would never use that for US Tech. Let's go 30-minute chart. Okay, one of the questions that I got during the overnight was, okay, Shane, volume. How do I add volume to my charts? Very simple. We're going to do this on MT5 first, and then we're going to go ahead and do it on TradingView. Now, what we're going to do is we're going to go to indicator. We're going to go down to volumes, and then we're just going to click volumes. You've got all your criteria there, your visualization, all your value up, value down, and then we're going to go ahead and hit that. Now, that's easy. That brings that up as a histogram at the bottom of your screen there. Relatively straightforward on MT5. That's how you put the volume indicator on your platform. We're going to cover that on TradingView in just a second. The other thing that I was asked is, Shane, how do I align my profit targets and my stop losses on my MT5 platform? Relatively simple. Let's go up here to my one-click trader. Let's go ahead and let's send a buy. Okay, so now we're officially long on this U.S. tech. You can see right here on my trade, my trade management module there. A couple of ways you could do it. You could right-click on here and sort of take a look at your orders and all the different things you can do. You can close your position. You can put new orders down. You can do all sorts of things. You can design your profit targets and stop losses from there. You can do that. For me, I like simple, guys. You know me by now. Simple's good. So if I just bought right there, what can I do? I can go right up to that order. I can click on that. I'm left clicking, and I'm going to go ahead and hold that and drag and drop my stop loss to where I want it. That's easy. So if I wanted my stop loss down there, that's great. Shane, what about the profit targets? You go right up there and you just left click and hold like a drag and drop type of a format, and you go ahead and set your trade up accordingly. That's as easy as it gets. So I would really recommend just doing that on my charts as opposed to going down here and right clicking and bringing up that window there and doing that type of business. Something to think about there. So that's how you add volume, and that's how you manage your trades in real time. I mean, it's relatively simple. And remember, if you want to close out, you just go over and hit that X, closes your positions out on that MT5 platform. Okay, let's head on over to TradingView. I do want to add volume to one of these just to sort of show you exactly how to do this. We definitely want to be looking at the Kiwi here in just a second. Let's say we were on this Kiwi. This right here is going to be your volume indicator. Now, on an OTC market, I typically have it set to ticks. There's many different ways that you can do this, but let's go to indicators here, and let's go down to volume. I believe it's right down here in the V's. Right there's volume. You just go ahead and give that a click, and you can see it brings that up in ticks. So what we can do here is go to your settings, and you can have your style, your visibility, and your inputs. What inputs do you want to do? You can use moving averages and things to try to get an average volume, or inputs and status line, whatever you want to do here. For me, it's just relatively simple. I put volume down to figure out exactly what's going on in the market. I want to know how many players are in the market. And typically on OTC markets, you can do that in terms of ticks. Now, let's just before we get to our Kiwi analysis, let's say I wanted to do that for a futures contract. Now, your futures contract's a little bit different. When you got like a monthly chart like this, say, it's got all of the contracts that changed hands on that on that specific contract. So if we're looking, let's say right here, we're looking at September crude. WTI crude oil, we can say back in this month already, we've 2.75 million contracts have traded hands. So buys and sells, the deals that have been made, each individual contract that's changed hands, 2.75 million contracts. That's decent volume. Not too bad at all for this early in the month. We're only about halfway through. So that's how you do the volumes. It's a great question because volume is important. I really do believe that if you're going to build a strategy that's based on volume, you need to be probably trading futures as opposed to trading OTC like the Forex or CFDs. No sound now? There's no sound? There should be sound. Can you guys hear me? I think we should be good. I got my little indicators going off, so give me a thumbs up if anybody can hear me out there. If you can't, I'll have to go over all that again. Should have sound. All right, guys, so let's go ahead and take a look at this Kiwi, this New Zealand dollar, U.S. dollar right there. You're going to have a Fibonacci retracement sequence right from that bottom right to that top, and you can see what's happening. Here's an absolutely beautiful trade. We're right at 59.17. We came down and checked out. Yeah, all good on your end, Alan? Yeah, Tina, it might just be local to you there. Yeah, we're getting thumbs up. Everybody can hear. Cool deal. All right, guys, so you got a little sell-off right there to 58.78, and now we got a nice bounce back to about 59.17. So this zone right here, this 58.78 for the Kiwi's big. So if you're holding shorts in that Kiwi, you need to be sort of cognizant of that support zone. I would not tell you to bail out of the market. Just understand that the fight there is at 58.75. If we do get some compression there and a break, we may be going much, much lower in this Kiwi. So for my support zones, if I was going to look to maybe potentially take a bid or reevaluate my shorts, I would be doing that from right there, 58.78, 38%, and then 62% somewhere right around 57.26. We should be good to go from those levels. And then, of course, 56.17. That would be another great potential long scalp. But that's sort of the path to success. If you're holding shorts, you're going to have to deal with 58.78. And you can see right here we had a nice low right there. This is a monthly chart. That's a big-time level. That's a macro level in play for the Kiwi. And that low right there is about 58.56. And then we bounced right back up above that three-quarter handle. And now we're rolling to the top side. So would I want to hold longs or shorts right now? I don't really know. I'm not really partial to either side. I can build a case to go short right here. We're up against our 13-month EMA, which is at 59.19. You can see right there, I mean, that's a big-time resistance zone as well. There's a lot of room between 19 and 78, but it looks to me like this market's sort of really getting compressed, and we may, in fact, be in for a break here in the near future. Let me see. What about U.S. oil? All right. I'm going to go ahead and get on to U.S. Oil OG. That's one of those that I definitely wanted to cover today. Remember, if you want to trade any of these ideas, head on over to the Switch Markets. Thousands of markets. Bring your ambition into focus with Switch low spreads, zero commission accounts. You guys can do the math on that. Definitely an interesting broker if you're wanting to trade. As far as our trade ideas, this is one of the trade updates I was going to put out there. U.S. oil, this was a trade idea that we put out yesterday. Daily resistance in view for U.S. oil. And you can see that our sell was right around, what was it, 63.79. We're going to go ahead and take a look at the trade right now. So 63.78 sort of was our 38% level, which was right in this zone. 63.78. Interesting, huh? 38% retracement, spike high to a spike low pullback right in the kill zone. What was today's high? Today's high was right up there at about 63.98. I don't know. Right now we're trading 63.57. Our entry to the short was about 63.69. So if we're going to take a good look at this, you can see exactly what happened, and it was pretty good. It was pretty good getting right there. Was just an absolute perfect strike. 63.79 hit that level right on the head. Happened right at 7 a.m. 7 a.m. my time, Mountain Time, 9 a.m. Eastern. That is right when volume picks up to trade WTI crude oil. You couldn't have drawn that trade up any better. When I look for a high-impact scalp, when I look for a textbook scalp, you say, Shane, what's great? I go, that's great. There's a couple of things that this trade had that not many other ones do. Number one, it had a great Fibonacci retracement, beautiful Fibonacci retracement, but the timing of the trade was everything. What was it? When was it? It was right after the volume came back to the market. Everything was happening, and it was happening fast. We knew that if we got a shot up at this resistance zone, odds are there was going to be enough punters to defend that area, at least for the short term, and that's exactly what we had. We had a nice pullback here, about a 90-minute pullback there, a nice sort of bearish morning before we made the next leg higher, and your low down there was about 63.18. If you take a look at our trade idea, we were looking for about 50 pips there, so our profit target would have been 63.19. I will admit there's a little bit of luck involved, but we've been talking about a lot of trade management there, and if you get within 1 pip of your target, and it's a 50 pip target, I would be very disappointed if you gave a lot of that back. Be very careful. Don't just say, oh, well, I was almost there and now I'm negative. You can't do that. You've got to be able to take some money off of those trades when they come your way. That trade was such a beautiful trade. I mean, it happened very, very fast, and you see that nice pullback. Now, what do we have? Then we made a second leg up, and now we're sort of failing right around this zone. I mean, I can build a case to hold shorts right now. Do I want to hold shorts, though? I mean, that's the line in the sand. That's the trade that cashed in. In my view, the premium trade's already gone. Do I want to hold shorts? It's problematic. And here's why it's problematic. I mean, they're getting ready for the big dance up there in Alaska. This is a big deal. This is a really big deal. They're meeting on an old Air Force base, long used to counter Russia. It's going to be a Trump-Putin meeting. Just the visuals out of this, and that's why Trump's doing it, is just to get the visual, the picture of him and Putin shaking hands and trying to say, hey, listen, we're working to end this thing. It's all about optics. It's all about optics with Trump. Understand that. And Putin's agreeing to take this meeting on U.S. soil. Granted, Alaska's way up there. I don't know if we have any clients up in Alaska. I don't think I've talked to any. But my dad's neighbors from Alaska. Yeah, they have friends and family come down from Alaska all the time up here in Montana. It's a pretty good flight from here. But what I'm saying is this is a historic meeting. And if it goes correctly, and there's a peace deal, and they come out of this saying, okay, life's good, and we're going to have a Russia-Ukraine peace, we could be in a position really for WTI crude to crater. Absolutely crater, because that's really one of the market drivers that are keeping U.S. oil up, is going to be the war. What if you don't have a war anymore? What if global supplies return back to normal? You got to remember, Russia's still a net exporter of oil, and that's great. That's fine and dandy. But if there's a peace there, I imagine the restrictor plates will be taken off of the energy industry from Russia. If that's the case, what happens to oil? Remember, the U.S. is supposedly producing a tremendous amount, getting ready to export up to 700 billion. $700 billion worth of energy exports to the EU. Okay, that's going to be a huge mass of supply. You put Russian supply back online completely. What do you have? You're going to have an absolutely epic glut of oil, and you're going to be in a position to launch down into the mid-40s. That's the reality of it, if that happens. Now, if this thing blows up, and what they're proposing is bold, suggests West Bank style occupation. They're talking about Ukraine making land concessions. They're talking about a demilitarized zone. They're talking about all sorts of things. Whether any of that comes to pass, it seems to me like that would be a hard deal to cut, but it may get cut. And if it doesn't get cut, we're talking about interest rates potentially coming down. We're going to talk about that more in just a second. I'll get to PPI finally. But if in fact you do get that and you get fresh geopolitical tensions in the Russia-Ukraine region, price goes up. Then we're looking at maybe selling 65s, which I would love to do right now. If we got a chance to sell those 64.90s up there, absolutely, we do it. We don't even think about that. No question. But that is the big market driver right now, Russia-Ukraine, for the U.S. oil market. We're definitely watching that one closely. There's your resistance zone. I absolutely love converging indicators. We have a trader in the room that'll point these out to me, the 13 EMA that coincides with a Fibonacci retracement. It's a beautiful thing. It makes my day. It really does. Nice, good levels, good clean levels. 64.80 is going to be your 13-period EMA, your 13-day EMA, and then you've got 64.91 right on the top side of that. I would really love that. The perfect world, you get a bit of a rally. Here, and we go up and potentially test that zone tomorrow during the meeting. That would be great. That would be fantastic. Because think about what you have on that trade. So you're building a short, right? So you've got what? You've got 65, which is the big round number, the key level right there, okay? You've got the 13-day EMA, which is camped out somewhere between 64.75 and 65. And then you've got the Fibonacci retracement right there to close the deal at 64.90. I mean, I'm getting excited. That's fantastic. I mean, that could be really a great trade for us. What you would love to do is to see maybe the market close down in here somewhere, and then we get a little bit of a dialogue and see a nice run up during the overnight. If you get that type of price action, that moving average will sort of move towards our 62%. That would be the kill zone for me. As far as intraday trading, I know everybody's saying, oh, what would you do right now? I'd say, well, there's your 30-minute chart. It's relatively straightforward to me. You can go with this most current leg right here. Spike low to its sort of a double top, and you're pulling back. Do you want to go long or short right now? I think the market's confused. If I had to call it right now, I'd say go short. From 63.66, stop myself out above 63.98. I put my stop loss up above 64. That would be a day trade that you could probably ride for the next hour. Will it be good? Will it work? I don't know. There's a lot going on in here, guys, and we got to be very careful with what we do with U.S. oil, Russia, Ukraine, U.S., Putin, Trump. I mean, the heavyweights are coming out to play. And anything can happen to these commodity markets. That includes gold. Gold right now we're seeing is off another 0.5%. Silver, a big downturn in silver as well, about 1.25. A lot of action, a lot of noise ahead of an absolutely huge event. So, OG, I hope that answers your question for U.S. oil. Let me see. OG, I placed a long at 63.23. Well done. Well done. I sort of showed you where the top side of that thing would be. What should I do? Should I hold or exit? I can't give you financial advice. I'm not a financial advisor. If I was a financial advisor, I would go to work for the Edward Jones shop that's like two blocks down. It was something I thought about doing young in life. Back in my 20s, I was saying, well, I could just go be a stockbroker and sell stocks and manage funds for people. It didn't interest me. I wanted to be a trader. I didn't want to be a fund manager. So should I hold or exit? I don't know. I sort of just gave you my analysis, OG. That's what I say. Shall I hold it again? I can't tell you whether to hold it. What I would say is if you bought in at 63.23, you sort of went up and you had a lot more money in your pocket than you do now at one point, and that's fine. But to hold or to sell or to hold, can't tell you, man. You got to make that decision has to be your own, and that's based on what you wanted to get out of the trade. If you've got what you want to get out of the trade in your hand right now, take it. If you want to wait and maybe wait for that leg up and gamble and play a little roulette going into that U.S. Russia meeting tomorrow, if you want to gamble and play with it, gamble and play with it. I can't tell you what to do. But I do like your entry. I mean, you nailed your entry, no question about it. It wouldn't have been my entry, but you nailed it. So that's good stuff there. That's trading, guys. That's trading. You're welcome, OG. Tina Jing, I placed at 63.20, and it starts coming down now. Yeah, you guys were buyers down there at 63, down in the 63.20s. I don't hate the play. I really don't. You can see right there, I had a 30-minute moving average down at 63.15 at about, 3 hours ago. It was a great move. It was a great play. It actually caught the move. For me, I was fixated on that being his top side resistance. Loved that play, and that's why we put it out yesterday. I am greedy. OG is going to let it run. I am greedy. What's the old Gordon Gekko? Greed is good. Here's a trade idea that we had out yesterday that panned out very well for us. It panned out very well for us. This was the US 500, closed near all-time highs, and you can see we stepped up and sold 64.74s, and we got out of there at 64.44s. This was a pretty good trade, and the reason why we decided to do this is because we had sort of a chart formation, but we also were up around all-time highs. So you can see right here, here was our entry point, 64.74. Natural resistance up here at 65. I love it. I really do love it, but we were only talking about 25 points. I mean, the lid is on the market now. 65 is big. Remember, when you have markets that are trending, don't ignore the key levels. Always be ready for key levels. We were locked and loaded for 65, and we nailed the entry. We shaded it. So this would have been a situation where we shaded 25 points. The reason why we sold 25 points beneath our key level right there is because I wanted to get in on what we call the easy money. Now, don't take that the wrong way, but a lot of times you will see the sellers that are going to defend 65 and the shorts, they will dig in before price gets right to 65. And the reason why is they don't want to miss the boat. They've waited a long time for this level. They want to get in there, and they want to get out. And right there, that's what we call the easy money. There was the sell. We took a bit of a drop there at about 64.80, and then the sellers came in and just thumped this market right down, right around your 64.44 area. It was within a few pips. Like I said before, when you get that close, you probably need to take it. But even if you didn't and let it ride, we came back up to entry today and went right back down and hit that take profit. So that was just a one-to-one trade, really a nice trade, and one of those that it was fantastic. It's been a pretty good week. Those two were rock-solid trades. And so if you got those, I know we had a trader in the room that got in on that US 500 yesterday, or the E-mini S&P 500 sell. It was fantastic. Let me see. We got a question here, and then we're going to get on. I actually got a lot more to cover. We haven't even talked PPI yet. Get out the popcorn. Jonathan Ross, how many assets do you trade, Shane? Are you a scalper or a multiple style trader? Multiple styles. I will swing trade. I've even done some long-term stuff with crypto. Shiba Inu was my pet rock a couple years back. I held that stuff forever. But I've done that. As far as which assets do I trade? I've traded seemingly everything over the years. Right now, pretty much religiously is gold and crude oil every day. And then I'm also looking at the E-mini S&P 500 and also the E-mini Dow. So I like those equities. Typically, those will play at one of my range numbers. There's been a bit of divergence between the US 30 and the US 500, so you can sort of trade both of those and get a little bit of insulation from one another. Like for instance, the US 30 is down a little bit, US 500 is up a little bit. There is a disconnect. I don't particularly like to trade the NASDAQ a whole lot just because of the intraday volatility with the E-mini NASDAQ futures. But right now you're looking at crude oil and gold. You're also looking at the US 500 and the US 30. Thinking about and also the Euro FX futures. Currency futures are what I prefer to OTC, but also trade some Forex, always looking at the majors, always. So that would sort of answer your question. They're always looking for something to run, Jonathan. You're always waiting for an opportunity and something to run. If you find a mover, a market that's moving, you want to get in on it. You don't want to be late. You want to get in. And that's sort of the idea. Typically, something's always moving. If you got a big day in crude oil, you can probably make a living just trading crude oil when it's active. Gold's been pretty good to me. I took a big loss. I still haven't forgot about that one last month. I'm on a sweep higher in gold, but still, on the whole, I really like trading gold. So gold and crude oil, I would say, are the primaries. I love it when the E-mini S&P 500 settles down, those futures. When they trade flat, that's absolutely a fantastic time to be in there trading rotational strategies, reversion strategies. That's absolutely fantastic. So those are the markets that I focus on right now. And, of course, currency futures with the Fibonacci's. The Fibonacci counterpunch work very well with currencies. As long as you don't have like a huge event that just blows them out of the water or sends the market trending. If you're trading normal type of conditions, man, those Fibonacci's are tough on the Forex. They really are. All right, guys, let's go ahead and take a look at a few other things here we need to do. Today was going to be U.S. PPI. Tomorrow's retail sales. It was pointed out to me in the Switch Markets newsletter that somehow the days got mixed up for retail sales. Retail sales is not on Wednesday. It is on Friday. So we're going to cover that live for you tomorrow. Trump, the Fed, and retail sales. We got a lot going on for tomorrow. We're going to be breaking down the Russia-U.S. summit. There's going to be some action tomorrow, so get ready. But buckle up. Usually I say no donation Friday. It's not tomorrow. We're going to be trading tomorrow, so be ready for that. As far as what we had earlier today, PPI was the story of the day, and it really was a big one. You can see that these numbers came in way above expectations, and that is sort of sent a lot of questions to the U.S. dollar. The U.S. dollar is up about 0.5% today, the DXY, and a lot of it's because our PPI figures came in so high. So remember your producer price index. All right, that's the view of inflation from the producer, from the wholesalers. It's not the prices we pay at the stores. It's typically the prices that the wholesalers are paying before they pass them on either to distributors or the consumers themselves. A lot of those have to do with commodities. A lot of it, you're going to start to see the tariffs creeping into the PPI, I'm afraid. And it looks to me like some of this tariff pressure that many economists have been just writing books on over the last 6 months, looks like it's finally starting to creep into the equation. I don't know how long it'll last, but we will wait and see. Core PPI came in at 0.9%, over 0.2% expected. Let's see right here. Initial jobless claims, we're not going to worry about that. That's a throwaway number. Don't get caught up in that trap today. But PPI came in at 0.9% over 0.2. Those are big moves, guys. Core PPI, both shattered expectations to the top side. And what does that mean? It means that inflation's running wild. Wholesale prices rose 0.9 in July, much more than expected. The producer price index jumped compared to Dow Jones and estimates for a 0.2. This was the biggest monthly increase since June of 2022. That is not good. Excluding food and energy prices, the core PPI rose 0.9% against the forecast for 0.3. Following the release, market implied odds of the September cut decreased, but only slightly, and that's the truth. So the next thing I was going to say is, okay, this is a major jump from PPI, a major one. And when we get a major like this, we sort of had flatlining PPI. Life was starting to look pretty good on the inflation front. This is a big jump. This shakes everything up. The first thing we expected was maybe these interest rate expectations for September were going to shift. That's not the case. They didn't move at all. We're still right up at about 90% expecting that rate cut. Boy, I mean, there was an old football coach on ESPN Game Day, college football, that would say, not so fast, my friend. Not so fast on this call. I don't believe it's a 90-10 at all, none whatsoever. I think it's more like a 60-40. If you get some hot inflation data coming in, and we got another PCE report, I believe, before that September meeting, if this starts to catch some real legs, I think there's a chance the Fed's going to stand pat again in September, and that's going to be a bullish dollar, and that's what we're seeing today. Let me see right here. I'm in oil off the 38%. Fibonacci 63.76 to a take profit of 64.60, stop loss at 64.29. So you bought in above the 38% retracement. All right, I don't hate it. I mean, I don't hate the play. Just be sure you stop yourself out. It looks like that level's starting to hold for well, you're back up to 63.85. 63.82. We'll have to go back to U.S. oil. Everybody's talking oil today. In any case, your interest rate expectations, we still are pricing a rate cut in. I'll make a call. I don't know that that's going to happen. Right here, Euro USD. A lot of folks are trading the Euro USD seemingly every day. This was our key level I was looking at on the monthly, 111.97, and we're up at 116. So that means absolutely nothing to us right now. Let's go ahead and take a look at another type of trading strategy here that's going to give us a good look potentially at a trade here for the Euro USD. Now, there was a lot of longs that piled in, came into the market right there on the 12th of August. That was sort of during our CPI madness. And then we got the big rally after that. Essentially, your entry point was ahead of CPI. It was about 116.42. And then your high right there was 117.30. So you got about 100 pips, 90 pips profit right there. Not too bad. But now we're coming back around. And it's important that we understand the 4-hour chart and its importance. Got retail sales tomorrow. Got U.S., Russia summits. This type of potential sale may be one to consider at least. You got a crossover brewing right in this area right here. We've got good volatility. We've got good participation. If this 4-hour crossover could definitely develop here on this bar close. So I would be watching the Euro USD, this 920 EMA crossover strategy. I would be watching that closely as we roll towards the Tokyo Open later on this afternoon. Definitely interesting, though. Euro USD is on the move, so be careful there if you're holding longs. But if you are long, is it time to panic? And I'd say, I don't know that it's time to panic necessarily. If we go back here, you can see your monthly, you're definitely in bullish territory. Let's go ahead and dial down our time frame here and see what we're looking at. Weekly is a challenge for me. Weekly is a challenge. I wouldn't be getting involved here. With this, with any Fibonacci retracements in that type of a sequence. It's just not going to work for you. Why? It's flat. The market is flat. This is what I call a picket fence, sort of a spike high, spike low, spike high, spike low. You don't want to use Fibonacci's in that type of environment because the market is not moving. It is not trending and it is not moving. And if it's not moving and you use Fibonacci's on it, you're going to run into trouble. I almost guarantee it. So if you're trading the Euro USD, the key level for me would definitely be right here. That right there is going to be your moving average. We just marked it with our line. I can go ahead and take it off, but it's going to be your 13-week moving average, which is right down there at 115.36. So right in that zone right there is key support. That's about 100 pips down the queue. So if we do get our crossover somewhere in this area, there is a little bit of room to work to the downside. Just remember, retail sales is going to be a big deal as we roll into Friday's trade. And then here's the daily chart right here. You got a moving average that we're butting up against right now, 116.36. Spike low to a spike high right there. Beneath 62%. My guess is you'll get a little bit of support down there at 116.20. This zone right here, if you wanted to buy it, you probably could. I would probably stay out of this. We're off big today on the PPI number. I would stay out of this. Maybe we get a rebound tomorrow on tomorrow's news cycle, but for right now, I'm not feeling too great about what's happening here to this Euro USD. It looks to me like the bearish side, probably the right side to be on. But as far as if you wanted to buy a discount, I would probably wait. I really would. I would wait. I would step back to my weeklies and say, okay, what is the key level here? Absolutely just atrocious market structure, but we do have a moving average. I probably would wait for a test of that moving average down around 115.35-ish. I want to see the market move. And the problem is we pull up a 4-hour chart and we say, okay, what's happening? Well, we are moving. We're coming off sort of over the last 12. The problem is it really that big of a move in the scheme of things? And the answer is no, not really. Not really. No, it's not. So be careful here. You definitely want to be on your toes with retail sales coming up. And if I was trading the Euro USD, I'd be watching this 920 on the 4-hour chart. If you do, in fact, get a sell signal, that's going to be a pretty good indication that it may be time to go short, potentially. U.S. oil, let's check in here. What do we got right here? Nice, really a nice big rally. So you guys that are holding longs, you're doing well. As far as what do I think about the market, 64 clearly is huge. So remember, when you're trading commodities, especially something like energies, 64 right there, big round number, key level. What do we have? Obviously, sellers are dug in front of 64 and protecting it right now to the downside, scalping-wise. Once that breaks, I would expect to make another leg up here in this U.S. oil market. So probably you may, in fact, fill in somewhere maybe 64.35. That you might extend up there in the next 45 minutes or so. Hard to say. But as far as your sell, remember that sell we talked about earlier, that's a pretty good zone. And I think that's probably where we want to be looking to trade to the short on U.S. oil. Something to think about here. All right, let's see. T Marina, that last jump in PPI is pretty high. What are some examples of types of wholesale businesses that might raise their prices? We start talking about a sector-by-sector breakdown in businesses that would, in fact, raise their prices because their costs have gone up. I mean, pretty much that's how all business works. When the business's inputs or the inputs that come in, the raw materials or the commodities, typically when those things go up in price, you're going to have to pass that along to the consumer. The tariffs are going to be a tricky thing, though, because the tariffs, and sort of one of the points that I've made, is the tariffs are going to put some businesses in a position to be hyper-competitive. And I don't know if you remember that, 2 months ago, one of the biggest really outlets out there that was complaining about the tariffs, and they were very, very vocal, was Walmart. And Walmart, we all know, and we've all been to Walmart probably, sells items at really bargain basement prices as low as they can put the price, because most of those things are imported from places with low labor costs. China would be the big one. So the idea is that, okay, if Walmart's running a store and 85% of everything in there is made in China, and all of a sudden there's a big tariff on Chinese goods, all right, Walmart has two choices. Number one, they can pass that tariff along to the consumer, and the consumer pays it. But all of a sudden, the prices on those goods just went up 20%. Are they competitive with somebody that's making things in the United States, which typically are much, much more expensive than what you find at Walmart? They really are. I'll use cowboy boots as an example. You can go to Walmart and buy a pair of cowboy boots or Murdochs down here, which is real similar market plan, or business plan as Walmart. Bring in goods imported from China. You could look at a pair of cowboy boots there and say, okay, this is a nice pair. I'm going to buy this for $140. And then you go look at the stuff that's just made entirely in the United States. Lucchese, you go look at a pair of Lucchese boots, and those things are like $700. So some goods, it's not going to make any difference. But let's say all of a sudden, you got like, you're selling like razor blades or something in there that are imported from China. And then there's another manufacturer from a country with maybe tariffs that aren't quite as high through a different outlet, and they don't raise their prices, and Walmart raises the prices. You can see how that just even the playing field, not just between countries and the export sector, but also the domestic businesses. So when you're asking me which businesses do you think are going to get hit, I don't know. I genuinely don't know. I can see where it's going to be a case-by-case basis, and some of them are going to sit there and say, okay, fine, we're going to eat the tariffs for 6 months to stay hyper-competitive and keep the pressure on the rest of the sector. You could see people making decisions like that. But you could also see the other side of it where the businesses themselves get together and say, fine, we're all passing these through to the consumer because we don't want to take a haircut. And a lot of things go into that. I mean, government programs, EBT. I mean, what about folks that buy stuff that are on stipends from the United States government? What about that? Do those things reflect tariffs? It's a grand experiment. We don't know what's going to happen. I have a sneaking suspicion it's going to make the business world. It's going to make it far more complex, but it's also going to make some people that couldn't compete, and some folks that had a competitive edge, like a Walmart, all of a sudden that edge is going to dwindle a little bit. That's going to open the door for other competition. So I don't know. It'll also open the door for different goods to be carried in Walmart from countries that don't have the big tariffs. I don't know what's going to happen, T. Which types of services? Who knows? It'll be the same situation. It'll be the same exact situation as the goods. I mean, some folks are going to eat the tariffs. The businesses are going to eat it. Others aren't. It's hard to say. It's absolutely hard to say. Yeah. Hope that answers it. I really don't know. And I don't think anybody knows. I think you could sit there and we could talk economics and we can make some guesses. I think that all of a sudden, the domestic beef producers are looking pretty good because there's tariffs on beef coming in from places like Brazil. All of a sudden they're looking at steep tariffs. How about coffee? Look at the tariffs on Brazilian coffee coming in. They're staggering. So, I mean, if you like your coffee out of Brazil, you're probably going to struggle a little bit there. That's a major soybean outlet too. What about the price of soy products? I don't know. We're going to have to wait. We're going to have to wait 6 months, and I'll get back to you. I have no idea. Let me see, Lewis. Shane, do you think the news from Putin and Trump will come after the close tomorrow? Typically it does, Lewis. I don't know what time. I don't know what time exactly the meeting is scheduled, and nobody's really saying right now. But what we do know is that Alaska is on its own time zone. It's on the Alaskan time zone. So that would be, I believe, 3 hours back from my time, 2 or 3 hours back from my time. So that would be 5 hours back behind New York time. So you could theoretically have a conference at high noon in Alaska, and it would be going off at 5 p.m. Eastern, which means the markets would be closed. So I would say that the news will come after the markets close, potentially. So that's going to set us up for an epic Monday open. It's probably the reason why they chose Friday as a summit date. They wanted the news to come out after the markets were closed as opposed to when they're open. But believe me, there's going to be a lot of rumors. There's going to be saber rattling out of the EU. There's going to be saber rattling out of the Ukraine. There's going to be a lot of folks talking during this London overnight is where we'll probably see the market reaction. And then we'll come back and we'll unpack all the events on Monday and start repricing assets according to the weekend news cycle. We've been doing it all year long. Maybe making massive gaps on Monday. Absolutely, Lewis. Absolutely. All right. I think that's a wrap. Yeah, let's see. Team Marine, examples of those related to these current tariffs. The biggest example I would look at is the Brazilian commodity exports to the United States. Take a look at that list. The coffee, the soybeans, the beef. You know, U.S. herd strength right now, everybody wonders why beef prices are so high, or they're at all-time highs right now here in the United States. It's because the U.S. herd strength was really low over the winter, and then you throw on these tariffs, and all of a sudden, you're talking about bringing cattle in to really supplement a weak herd strength. That's not happening. So the price of beef's up, and then commitments to ship in that agriculture bill with the UK, all of the beef exports to the UK. It's driven the price out of sight. So we'll see if they can get that under control. That's for sure. Let me see, Lewis Shepard. I've noticed that Trump does this a lot. Yeah, there's always news coming out after the markets. There's always a press conference at 4:05 Eastern or something right after the markets close. And that's just sort of the modus operandi of the White House. That's what they do. All right, guys, I'm going to go ahead and sign off for right now. Thus far, it's been a good week of trade. We'll have a trade ID out for you probably in the next couple of hours. I'm going to go ahead and look over the board. I want to be careful though going into the retail sales and the Trump Putin meeting. Expect fireworks. Expect the unexpected. Expect anything. As far as tariffs go, in this PPI number, this PPI suggests that this is a real hot environment. A real hot pricing environment, and you're starting to see the tariffs show up in the producer side of things. T. Marina's got some great questions. One of the rules of this stream, if I don't have an absolute answer, I'm not going to BS you, but I would start looking at commodity imports as being probably a great sort of. I understand product imports are one thing. I understand that, but the commodities, the raw goods and services, I'm surprised to see tariffs on things that are that high. Usually, for your raw goods and your commodities, you just secure your food at all costs and you leave that alone, but there's tariffs there. My guess is those are going to be rolled back, but I don't know. I genuinely don't know. All right, everybody, I'm going to go ahead and sign off here. Let me see. T. Marina, which of those types of companies does the Fed look at to determine rate cuts or hikes? The Fed looks at the PCE figures, and then they sit around and take the temperature of the room, the FOMC boardroom. So theoretically, they're supposed to look at PCE and core PCE, which is sort of baseline inflation, and they look at it over a 12-month cycle. So, not only are they trying to really figure out where prices are right now, but what's going to drive them. And the idea there is tariffs has been the big cop-out for the Fed. They've really hesitated on cutting rates because they don't know what tariffs are going to have, what the impact of the tariffs are going to be. And now that you see sort of something that you can directly correlate to the tariffs, and that's PPI, now the Fed's sitting there going, hey, our narrative's going to play great. And that's really why I went back to this and said 90-10, probably not. I think it's much closer to maybe 60-40 or 70-30 that you get a rate cut. This is very complex stuff, guys. When we start talking economics at this level, this is very complex. Everybody's got a guess. Nobody really knows what's going to happen. And right now, U.S. oil sort of flirting with 64. We could get a break over 64. You could close the day over 64. That's possible. Good bullish price action. 63.91, 63.90. Participation's there. You got about another 30 minutes of hot trading in the crude oil market today. 63.92. Looks to me like you're going to break 64. If that's the case, I would be looking at probably 64.35 to my top side. We'll wait and see. All right, guys, I'm going to go ahead and sign off. I've gone on long enough. This was a long stream. We had a lot to cover, though. Tomorrow we'll be back with Trump, the Fed, and retail sales. Bring any and all questions. If you have a specific question you'd like answered on these live streams, send me a private message over at How to Trade. That's where we address the trade management on MT5 and then also how to set the volume indicators. All right, guys, that's a wrap. You have a fantastic trading day. Trade the action well, and we'll talk soon. See ya.